Is married filing separately better for your taxes? If you are married and wondering about your tax filing options, you might be curious about the benefits of filing separately. Let's break down what this means and how it could impact your taxes. When you choose to file as married filing jointly, both spouses combine their income and deductions on one tax return. This often leads to more tax benefits and a lower overall tax liability. On the other hand, married filing separately means each spouse files their own tax return, reporting their income and deductions separately. Filing separately can lead to losing access to many important tax credits. For example, if you file separately, you may not qualify for the Earned Income Tax Credit or the Child and Dependent Care Credit. Education credits, like the American Opportunity Credit and the Student Loan Interest Deduction, may also be unavailable. Another key difference is in tax brackets. When filing jointly, you benefit from wider tax brackets, which can lower your tax rates on combined income. However, if you file separately, the tax brackets are less favorable, which can increase the total taxes owed. The standard deduction is also impacted. For the year 2024, the standard deduction for married filing separately is approximately $14,600 for each spouse. In contrast, if you file jointly, the combined standard deduction is $29,200. Retirement contributions can be more restrictive when filing separately. Individual retirement account contribution limits and deductibility may be limited, making it harder to save for retirement. Additionally, both spouses must either itemize deductions or take the standard deduction when filing separately. One spouse cannot do one while the other does the opposite. Filing separately can also be more complex. You will need to prepare two tax returns, which can take more time and may increase your costs. However, there are situations where filing separately could be beneficial. If one spouse has concerns about the other's tax reporting accuracy or potential tax debts, filing separately can protect the other spouse from liability. If one spouse has high medical expenses, filing separately may help them meet the deduction threshold more easily. In rare cases, if one spouse has very low income and the other has very high income, filing separately might reduce the overall tax burden. But this is not common. For many Asian American families, maximizing tax benefits is important for supporting education, health care, and retirement savings. Generally, filing jointly maximizes these benefits. However, if there are concerns about financial or legal separation or complex income situations, filing separately might be worth considering. It is always a good idea to consult a tax professional who understands your specific circumstances before making a decision.